Okay, so today we're diving into the Ethereum blockchain's latest big move, the Pectra upgrade.
That's right. Pretty significant update. Probably the biggest since, 2022?
Yeah, sounds about right. We'll get into the tech details, what it's supposed to do for, speed and costs.
And how the market reacted initially, of course.
Yeah.
Plus broader factors influencing the price.
Exactly. Things like how ETH stacks up against Bitcoin, institutional money, network stats.
And maybe some technical chart levels people are watching.
Absolutely. So if you find this kind of breakdown useful, please do hit like and subscribe for more.
Okay, so Pectra. It went live successfully on Wednesday. The main goal really is making Ethereum faster and, cheaper to use.
Right, through a whole bundle of changes, right? 8 EIPs, I think.
8 Ethereum improvement proposals, yeah. And a really key one is EIP 7702. That introduces account abstraction.
Account abstraction. That's the thing that lets regular wallets act a bit more like smart contracts.
Precisely. And one potential outcome, which is pretty cool, is maybe paying gas fees in tokens other than ETH could really smooth things out for users.
Interesting. What else was packed in there?
Well, they increased the maximum number of blobs per block, went from 6 up to 9.
Blobs. Right. Those are the dedicated data spaces for layer 2 protocols.
Exactly. More blobs means, theoretically, more capacity for layer 2s, which should speed them up and lower their fees. So better experience on things like rollup.
Okay, makes sense. Anything for the validators?
Yep. Validators can now collect rewards on up to 2048 staked tokens. Before it was less.
I believe so, yeah. So this could pull in more validators, beef up security.
That seems to be the idea, more incentive to stake.
Yeah.
And Pectra also reinforces the deflationary aspect of ETH.
By burning part of the transaction fees, right?
Right.
Taking ETH out of circulation.
In another sort of quality of life change, the recipient of a transaction can now pay the gas fee.
Oh, that solves that annoying issue where someone sends you something, but you don't have ETH in that wallet to even move it or use it.
Right. Tackles that specific problem. And, just as a standard precaution, exchanges like Binance and Coinbase paused ETH deposits and withdrawals briefly during the upgrade itself.
Standard procedure for a big network change. So, okay, lots of technical upgrades aimed at improving the network. How did the market react? What was the vibe?
Well, initially on May 7th, it was actually pretty muted. ETH seemed to be lagging a bit, especially compared to Bitcoin and some others.
So not an immediate upgrade pump.
Not immediately, no. But then data from the next day, May 8th, showed a bit of a turnaround. ETH got back above $2,000, even touched, $2,069.
Okay, some positive movement followed.
Yeah, and trading volume spiked significantly around that time, jumped nearly 46%. That suggests people were definitely paying attention and trading around the news.
High volume is usually a good sign of interest, at least. Any particular takes on the price action?
Well, you had some analysts like Crypto Rover saying on May 8th that buying ETH below $2,000, he compared it to buying early New York real estate.
Okay, so a very long-term bullish perspective there, suggesting it's a major entry point.
That's the implication, yeah. Looking purely at the charts, technical analysts saw potential upside too.
Like what sort of levels?
A break above what they call the point of control, around $8,850. Some saw that potentially opening the door to $3,000.
Wow, quite a jump.
Yeah, and regaining $2,000 after bouncing off support near $1,800, that could signal a rally maybe towards $2,820.
Any other key technical markers?
The 200-day moving average, the EMA, was around $3,056. That's often seen as a potential target or resistance level.
But it's not all clear sailing, presumably. Any warnings?
Oh, definitely. There's always caution. Analysts mentioned potential pullbacks to fair value gaps on shorter time frames, basically areas where price moved very quickly, leaving imbalances.
Right, potential dips.
Yeah, and for the bullish case to really be confirmed, ETH needed to hold above, say, $1,900 to $1,920.
Okay, consolidation above that level.
Exactly. And if that $2,000 breakout failed, the risk was falling back towards $744, maybe even lower. So, probabilities, not certainties.
Always. Now, you mentioned Bitcoin earlier. How is Ethereum looking relative to Bitcoin around this time?
That's an interesting angle. Data from CryptoQuant suggested Ethereum was, and they use the term, extremely undervalued compared to Bitcoin.
Extremely. When was the last time they saw that?
Apparently not since 2019.
Okay.
And the point made was that historically, when ETH gets that undervalued relative to BTC, it sometimes precedes a period where Ethereum starts outperforming Bitcoin.
A potential indicator for rotation, maybe. What was the actual ratio?
The ETH-HBTC pair was trading closing around 0.00335 on May 8th, which, yeah, clearly showed ETH underperforming Bitcoin at that moment.
So that relative valuation is definitely something traders are likely watching closely. What about the big money, the institutions? What were they doing?
It was a bit of a mixed picture there. On the one hand, BlackRock's Ethereum ETF actually saw inflows of $20 million on May 2nd. That was notable because the broader market was facing some headwinds then.
Okay, so some resilience there, specifically in that BlackRock product.
Yes, and their ETH fund, specifically, pulled in $20.1 million that day. That brought BlackRock's total ETH holdings to almost 2% of the entire market cap, which is substantial.
Wow, nearly 2% just from them, but you said mix.
Right, because looking at the whole week ending May 7th, digital asset investment products overall saw net outflows of $150 million.
Okay, money leaving the space generally that week.
And Ethereum-focused funds were a part of that outflow, accounting for about $40 million of the total. Plus, on May 7th itself, institutional inflows into the spot Ethereum ETFs were only around $5 million.
So not exactly a flood of new institutional money pouring in right around the upgrade itself, despite the BlackRock inflows earlier.
Seems that way. Maybe some short-term caution or profit-taking, even if some players are building long-term positions. It's not one simple story.
Definitely sounds nuanced. Okay, let's shift focus to the network itself. What was happening on-chain? Activity levels, fees, that sort of thing.
Well, looking back a bit, Ethereum's fee revenue had actually dropped quite dramatically, like 94.82% between November 2024 and May 2025.
95% drop in fees. Why so much?
Primarily lower demand for mainnet transactions, and crucially, the big shift towards using Layer 2 solutions. People doing more activity on L2s means fewer fees generated on Layer 1 Ethereum.
So the success of L2s ironically reduces L1 fee revenue.
Exactly. Transaction fees themselves were down about 95% over that period, too. But more recently, there was a flip side.
Okay.
Increased network activity, possibly related to the upgrade buzz, led to higher gas fees again, and that accelerated the ETH burn rate.
So more ETH being destroyed.
Yeah, the burn rate hit its highest level since early May. This helps reduce the circulating supply.
And did the Pectra upgrade itself impact activity immediately?
It seems so. Reports indicated a surge in network activity right after the upgrade. This contributed to the circulating supply dropping to an 18-day low, around 120.69 million ETH.
Lower supply, potentially bullish if demand holds up. What about users?
Active addresses also saw a jump, climbed to a 30-day high. That suggests renewed user engagement, people coming back or new users interacting with the network.
So despite the long-term trend of lower fees due to L2s, the upgrade itself seems to have sparked a short-term boost in activity, burning, and user numbers.
That's what the data suggests, yes. A lot of moving parts.
Absolutely. So wrapping this up, the Pectra upgrade is clearly a major technical step forward for Ethereum, trying to tackle scalability, cost, user experience.
Definitely foundational changes.
And while the immediate price reaction was maybe a bit slow off to mark, we saw some recovery and signs of interest picking up later.
Right. The volume increase and the bounce back over $2K were notable.
Looking ahead, it really feels like the interplay between Ethereum's value compared to Bitcoin, what institutions decide to do.
And whether this recent spike in network activity and user engagement actually sticks around, those will be the key things to watch.
For sure. And these new capabilities like account abstraction, making things easier, and potentially even cheaper layer 2s thanks to more blobs, that could really open doors.
Yeah, new applications, maybe wider adoption if it all works as planned. The ripple effects across the whole crypto space could be quite interesting.
It's definitely a development to keep a close eye on. That's our look at the Pectra upgrade and its initial impact.
Hope you found that useful.
Thanks for tuning in. Remember to like and subscribe if you want more analyses like this. We'll see you next time.